And then moving on to the GBPUSD. GBPUSD was not really good for us, as in we saw price break down that trend line. The trend line was supposed to be our guide going into the new week was broken to the downside. This trend line was broken, and we price closed at break even on that one. And if you see what happened here, price went up. We were here yesterday, profitable. Then it broke even. Then again it went up again, and when price broke this trend line, that was a signal for me that things are not quite going that bullish anymore. So I had to reanalyze and open a sell stop order right below that trend line. And fortunately, we were able to take around 110 pips on this one yesterday. And right now, let's see what's happening. Let's see what's happening on the GBP Let's see what we can do on this one. So if we go to the daily time frame and let's see what structure is giving us, we have definitely it's glaring that we are on a bearish momentum for some time now, and I want to connect the lower lows and see how price has been doing since the later aspect of last year. And so we have something like this. Price has been rejecting this bearish trend line, and then we saw this move, then the sudden breakdown during last days of the last month, and then we saw a rejection of that trend line. Price appears to be going further down. So definitely, if you want to trade this, we want to be looking for opportunities to sell the pound against the dollar. So if we scale down to a much lower time frame, what do we see on the lower time frame? The first thing we'll notice is that we had a breakdown of structure around here. Uh, we had a breakdown of structure around here, and there is another one around this area, which I'm going to be calling our new key level area. I think is it 229 or 22? Okay, 2.3. Let's use 2.3. It's more psychological than the rest. So if we label this key level at 1.23, let's place it right at the top of this, and okay, let's place it at the bottom so that we have it's clear enough. So at 1.23 we have that key level to work with at this point. So like I said, if we want to be trading this, we want to be looking for selling opportunities. And if we look closely into what structure has been giving us since the 5th of May, after that breakdown that happened around here, we saw multiple rejection of 1.24 area, making that area also a solid supply level. We can see that here. So I want to give that a light yellow, a light red rather, to signify the so allow me to label this for clarity's sake. We have a supply zone right inside that area, and then okay, I think let's make it like this. So that area is our supply zone. As we can see, multiple rejection of that area since the breakdown of that trend line. We saw 1, 2, 3, 4 before this impulse leg that broke through that key level during the course of yesterday's trading session. So now that we have that, now we have an impulse leg that we can work with at this point. And then if we bring out our retracement tool at this point and we run it through that impulse leg, though we are not sure when this impulse leg is going to end. Definitely we are not sure when it's going to end. It will only end when we see structures that looks more like this. Let me see something like this, or reversal pattern. a rising wedge, whatever it is, a flag pattern, a breakout of structure, then we can say that this impulse leg has actually culminated. Then we can now measure our golden zone, which is always between 50 to 78.6% retracement, to look for a new selling opportunity on the GBPUSD. So if we run our retracement tool, like I said, I don't know where this is going to end, but right now it appears it's around this area. But in the future, we might still have a situation where price will still do some price going below that level before we now see that retracement wave happening. So, but because of for the sake of this video, let's assume this is the end of the impulse leg, then we will be looking for a sell opportunity around the 78.6% and the 50% retracement of that impulse leg, where that place will now be our new supply level that we will be looking for opportunity to sell the GBP against the USD. So that means we'll be looking for, based on this structure, like I said, we don't know when the impulse leg will end because we haven't seen structure that supports the combination of that impulse leg. But for the sake of this video, we have something around here, and then we'll be looking for structures that will support, then probably a breakdown of that key level one more time, a retest of that key level, to send price crashing down to the downside, and then we can be extending our this impulse leg as our new take profit target in such a way that we can use our what is it called? We use our extension tool to actually have an accurate figure where we will be looking at a minimum of 1272.2% extension of this impulse leg, which might fall around this area based on this impulse leg that we identified, which we've not yet confirmed, but we just have to do that because of the nature, because of the sake of this video. So we might be having a profit target around that area in the next, we don't know, probably before the week runs out, or probably next week. So we have a profit target around that area that I'll be looking forward to at this point. So like I said, it's only advisable that we look out for selling opportunities at this point. And there's one more thing that just came to my mind. There is a possibility that price might even come back to the supply zone at this point. Then we look for reversal setup that will align in favor of a downtrend continuation. So this is one way we can look at the the pounds against the dollar going into the new trading day. So that's that on the GBP USD. So moving on, let's move on to, okay, UK oil yesterday. Yes, we are on UK oil right now. I don't know if Khan is around. Khan is always keen with the UK oil thing. So here we are on the UK oil. This is what we have here at the moment. Remember yesterday, let me go down to I think 45 minutes or 1 hour time frame, and let's see. Remember I said yesterday that this to sell the UK oil, we will be looking for signal in the form of a breakdown of this bullish trend line, the one that's highlighted in red, and that is we'll be looking forward to a breakout of a breakdown of that key level, which actually happened, and then didn't go through. We saw that. We saw a breakdown, then a retest of structure, which will be our confirmation, but the retest did not happen as price broke above that trend line to give us probably what looks more like a bullish continuation, but price broke down that structure one more time and came down into this area. So definitely we wouldn't have taken the sell opportunity, so I'll have to delete that right now. So deleting that. So what do we have here? So I said something about the bullish momentum on this one, and I said that we will be looking forward to a breakout of that structure. Remember, we said first of all we saw this what's it called, this bearish trend line. We saw this breakout that happened yesterday. We saw it yesterday, and we were saying we still need more confirmation to guide us into probably a second wave of bullish momentum. However, we were waiting for structures in the form of a breakout of this key level, a retest into this key level with structures that support a trend continuation to the upside, breakout of structure, a retest into structure confirmation into the upside. So that is what our perspective was, just to remind you what we were expecting on the UK oil. Now we have a scenario where price has actually broken out of that key level, as we can see what happened here, and we saw a retest into that key level, but price went even further down into that key level. So at this point in time, we want to be looking for structures that will support a bullish momentum, and we need to look at this on a lower time frame to actually see what is happening at this point. We want to be seeing a signal that is a breakout of that structure, a retest into that structure. Then we can now join the potential rally if it's going to happen. So now we scale down to a much lower time frame, let's say the 15 minutes time frame, and let's see what structure is giving us around this key level. So around this key level, we have a structure that looks more like this. We have this one, we have something like this. So we have this, then we have this, the rejection of 104.6, which was very sharp. Price came back up, then it came back down again, but it didn't get as far as the previous low. So hereby giving us something that looks more like a reversal pattern in the form of a what's it called, a double bottom structure. However, we still need a significant breakout of the structure, and this breakout is not yet significant enough. So it's still well, we can still call it a signal, but we still need to look for structures that support a trend continuation to the upside from this area. So for me, it's advisable at this point that we look for entry opportunities right above that key level, and that's going to be around this area. So let's place our the other proposed order price at 106.24 at this point, and then let's see what happens as day goes by. And if we look closely into what's happening, I don't need this anymore, so let's delete this. We have a bearish trend line right here on the 15 minutes time frame that we can also use as a guide going forward. And if we draw the trend line across, we can see we have a structure that looks more like that. Then we want to be seeing a breakout of that trend line, giving us a sign that the trend line is not strong enough, or is not capable enough to hold the buyers anymore. So we want to see that a retest, then we can join based on any structure that supports a bullish trend continuation to the upside. So for me at this point, it is safe that if you want to buy the UKOIL, we want to buy right above the key level at 106 area, and then we have our stop loss right up below the previous low at around 104.49 area. And remember, this is still our demand zone that has a memory for buying power as far back as alpha. Let's see how far that is. As far back as mid of March, we've been having that price reject that area always once price comes into that area, and that has happened this month. And we want to be using that pattern as a guide going into the new trading day, as we await the New York session to commence in the next 2 or 3 hours. So we have our stop loss around here, and our take profit still remain right at that supply zone we identified yesterday at around 112.5 area. So so this is what we'll be looking at for today, and let's see how price is going to react. So that is that on the UK oil. I just hope Kano's around to be with us on this one.